Welcome back, everybody. It's been a while. I think it's been since December. Hopefully, I can come back to you guys with a more consistent schedule and uploading more frequent videos. Today, we're going to be talking about Pfizer. This is probably a company most of you are familiar with. Definitely with the recent few years. Sorry. Obviously, here in 2020 and 2021, maybe a little bit of 2022, you're quite familiar with what this company did and what they do. I guess I'll give you guys some input if you don't. So obviously they came out with one of the vaccines for the coronavirus, the Pfizer vaccine, probably the most popular vaccine and the one that, in my opinion, most were probably trying to go for if they were planning on getting vaccinated. If we come briefly down here, first we can just kind of point out here right away is obviously they're changing revenue. So obviously in 2019 and 2020, 2019 coronavirus wasn't a thing. 2020 coronavirus started to come out, but this time, the vaccines weren't really going out at that time to people. So obviously the revenue is pretty much the same as 2019. Then we see a huge jump here in 2021. Revenue basically doubles. And obviously this is coming from the coronavirus vaccine that they provided to the people. So everybody was trying to get that. Like I said before, just my opinion, I thought that, Pfizer's the most popular vaccine, and that's the one people are trying to go for over the other ones like Moderna. 2022, obviously not as much of a big jump. But obviously another 20 billion in revenue, can't complain if you're Pfizer. Obviously a lot of this revenue is coming from the coronavirus vaccine, and they can kind of pop over here to their Pfizer 2021 annual review. I wasn't able to get my hands on the 2022 review yet. The date of this video is March 6th, so when I'm editing this video, hopefully I can find the 2022 report here before I upload this video, and if I do, I'll try to add this into the video. But we can go here through the year in review. We can actually find, here we go. So we can actually find the revenue from 2021 and where it came from. So obviously this is the top 10 medicines and vaccines. This one here, this is the coronavirus vaccine that they provided. So obviously 36 billion, almost 37 billion dollars coming from that in 2021. That basically, when you look at this circle, this almost like this pie, this circle chart, it's more than half of their revenue coming from the coronavirus vaccine. And the second and the third one here, this is medication for blood clots, and this one is, I believe, for breast cancer. Kind of did some research pre-hand. Not too familiar with any of these. I'm not gonna really go through these one by one. If you guys are curious, you can pause this video and search these up if you're curious what kind of medications or vaccines that these are that Pfizer provides. Going to Stock Unlock here, shout out to Stock Unlock. We can actually kind of type in the Pfizer company here, and we can start looking at their financials, looking at their valuation and their returns. Popping in here into the insights. So Stock Unlock gives this insight score 3.56 out of 5, so that's rated as a good. First thing we can actually see here is the quick blurb. So Pfizer has grown their revenue at 23.63% over the past year, which is strong growth. Also has a free cash flow margin of 25.95%, so call it 26%, which suggests the company is very profitable. We can come down here and see that's broken down. So we have an analyst here. Obviously, you see red right away here. The next year projected earnings per share and the next year projected revenue is, down 35%. Now, in my opinion, I'm not surprised to see this. Obviously, like you guys saw just a couple minutes ago, a lot of the revenue, over half of the revenue, came from, the coronavirus vaccine with their top 10 medicines and vaccines. So with, the coronavirus calming down, people starting to relax, people, starting to, like I said, relax and not get vaccinated or get their boosters, this revenue is going to drop. So obviously, seeing a number like this, I'm not necessarily agreeing with 30%, but I'm not surprised to see, I won't be surprised to see a decent drop in revenue coming with Pfizer. So that's kind of like, a signal maybe not to buy the company, but I'm just going to be going over Pfizer and giving you guys my opinion whether to buy or sell. I'm not going to recommend you guys anything to buy or sell. This is not a channel where I give you guys any type of recommendations, just my opinion and what I think is best for my portfolio. And yeah, so please guys, take this just everything as just in my opinion. Nothing here is a recommendation or anything like that. Coming down here, furthermore to their financial health, obviously not too many people pay attention to the current ratio, but 1.22 average, that is nice to see. The shares decreasing by 0.4%, that's nice to see. Coming out to their dividends and their payout ratio, so they're paying out about 30% of their free cash flow. That's a good thing to see. So when they're paying out under 50% of their free cash flow, when they're paying out, the payout ratio, is less than 50%, the company anticipates more growth in the company. So they're going to put more of their free cash flow, more of that leftover money, those profits, back into the company, reinvest it into the company, grow the company, rather than paying it back to the investors. So when you usually see maybe a company that has a payout ratio of over 50%, depending on what sector in, that probably means that they don't anticipate a lot of growth in the future, or it's slowing down and they don't want to reinvest as much money back into the company, so they're going to give those profits back to the shareholders as a dividend. Okay, looking at the financial health here, we ran over that. So the growth here, this is kind of nice to see. I'm not sure if this really, this revenue growth, this gross profit, and this net income is going to really stay at these numbers, with their revenue probably coming down in the next few years here, as like I mentioned, and those people are going to be getting the vaccine, so the revenue is going to kind of come back down to the pre-coronavirus levels. But the revenue is increasing by 23.63%. They have a gross profit increasing of 30%, operating income 46%, and their net income by 42%. But we do see an operating cash flow decreasing here by 10%. The profitability, this is probably the most attractive one to look at, and their returns, obviously we see all nice and green, so this is kind of where a lot of people would be looking. Their gross profit, nice and healthy, 65%. Very good all the way down the board. Continuing operating margin, net margin, free cash flow margin, and the cash conversion, very nice to see. When we look at the returns here, obviously you have the return on investment, 26%. The return on equity here, 32%, and the return on assets, 15%. So you're really actually seeing some nice returns here for the company. The valuation, the PE ratio, 7.4. We're going to go actually into more detail here when we go to the freeform tool here on Stock Unlock. So the PE ratio below the 5-year average, 14.5. That's very nice to see. Undervalued, possibly. That's just my opinion, not a recommendation. Price to free cash flow, same thing. And the price of sales, same thing. But the 5-year stock growth of 20% is below the SPY, and the 3-year stock growth, same thing, below the SPY. We're going to go to the freeform tool here and kind of go deeper into this valuation to finish up the video, in my opinion. So we'll go to Pfizer here. And here's the price to earnings. So we do have a price to earnings here, like you said, but we do have an average here, the latest of 27.91 with an average of 39. We can stretch out literally here all the way to the beginning of 2000. Past 23 years, the average has been, 27.91. The latest, 27.91. Interesting. We can come down here to maybe where it's a little more less volatile. 2017 here. This is the past 6 years. Average is 34.86. So if you're looking at this company, in the past 6 years, including the coronavirus times, it's quite under the average here by 7. So this can be undervalued, right? Like I said, we look at back there, price to earnings. We can look at price to free cash flow here. And what the heck? Okay, one sec here. Put them up looking here. There we go. Okay. There we go. So we look at the price to free cash flow here. Also, we have the latest of 129 here. Obviously, with the average 169, so it's quite, you know, valued way well over. Oh, my mistake here. We actually do have the wrong Pfizer stock. Sorry about that, guys. We do have the wrong stock here. There we go. That's what we're trying to look at here. So when you go all the way back, sorry about that, guys, my apologies. When we go back here for the 23 years, you have an average of 12.63 price to free cash flow, and we're sitting at a latest of 8.8. For the past 23 years, the average has been 12.63, but we're sitting at a number of 8.8 here. That's attractive in my opinion. We go back here to the stock we looked at. We had the Insights tab here. The valuation has been looking great. Obviously with the flag of very good, the value 49%, 40%, and 49%. This is an attractive thing to see. Obviously the key metrics for this company is the price to free cash flow and the price to sales. In my opinion so far, justifying and noting that the revenue is going to be dropping and some of these return numbers may change with their profitability, depending on what medicines and vaccines they have coming out in the future. These numbers might change, so right now, until I do a deeper analysis into Pfizer, I would put this at a hold in my opinion. I wouldn't put this as a buy in my own personal portfolio. Later on, I may come back as an update video to talk about whether this is a buy or sell, in my opinion. But yeah, like I said, so far, I think this stock is a hold. Neither it's a buy or a sell right now for my own personal portfolio. Hope you guys enjoyed this video. Kind of rusty for coming back from my first video in a while here. I'm gonna be uploading a little more consistently here. Drop a like, subscribe if you guys enjoyed this video. Drop some comments down too what I could do better about these videos and maybe some other stocks I can really look at you guys here for quickly. This was kind of a brief one to look at, not as a deep analysis here, but if we go into deep analysis, really look down to the potatoes of the company here, might take a little longer. Make sure you guys drop, like I said, and I'll catch you guys in the next one. Peace.